does this make you lose faith in media, or does this make you lose faith in the Democratic Party?
All. all of the above. To me, it seems like there's just no possible way that they did not know that he had cancer. I mean, we're talking about stage 4 cancer in his bones.
The U.S. is becoming a less trusted debtor, somebody that you'd want to lend money to, which means that people are going to be becoming less and less willing to lend money to the U.S. So our debt's going up and the cost of borrowing is going up. This is a crisis. This is a big, big, big deal.
What's up, everyone? Welcome back to another episode of the Adventure Capitalist Podcast. In this podcast, we dive into the world of adventure, entrepreneurship, investing, and business. We're back for another episode. My name's Austin Bronner, here with my co-host, Cody Shirk. How you doing, man?
I'm good. I'm feeling a little bit of guilt knowing that you walked your 50 miles and I sat on my ass all weekend. I didn't sit on my ass. I was playing a rodeo clown for my kids, but I definitely had
playing rodeo clown.
Yeah, I got my ass kicked by them, but not as bad as you did. So I want to hear about like how bad your feet hurt right now.
I'm super happy to have completed the 50-mile walk. For some context for people, we've been talking about this in the show for the last couple of months that we committed to do a 50-mile walk in the month of May under 20 hours. So this Sunday, I went out and did the Banks to Vernonia Trail in Oregon, and it's about a 22.5 mile out and back. So 22.5 miles out and back. It's mostly a bike trail, but it's relatively flat, like only maybe like a little over 1,000 feet in elevation. And we planned on doing it this Sunday. Woke up super early, went out, woke up at 3, got on the trail by 4 because I had to drive there, and just started going. And then we walked, I think all total, it was a little over 50 miles, between like 51 and 53 miles is kind of it's hard to tell exactly, but that's where we think we hit. And we left at 4 and ended at 8:45. So it was 16 hours and 45 minutes. And we probably took about 25 minutes, maybe 25 minutes for lunch. And then a couple of different short breaks, like 5 to 7 minutes to change shoes. So the whole time we're walking. And yeah, I was very sore, very, very sore after that. I would say the first like 35 miles were actually pretty fun. Like it was, just like a normal hike. And then the last 15 minutes started to get pretty hard. And then the last 8 to 9 miles were just kind of like a slog, where it was just like everything was pretty much every part of your body starts to hurt, like things that, in your neck or whatever. And you're just kind of looking at every step is just a little bit closer to the end. And that's really all you could think about. But it was awesome. Really, really good experience. And yeah, I woke up very sore the next day, kind of like a deep soreness in your feet. My feet really, I think that's the one that it's really hard to train for. Fitness wise, it wasn't that big of a deal. It was just like the beating on the feet, because it was about 105,000 steps in one day.
You needed to harden your body before.
You need to harden the body.
That's like something you can't really train for, except for just doing it.
For just doing it. I was really thinking about that. I was like, how do you actually prepare for like getting your feet toughened up? And I think you just have to continue to run, like if you run like 15 to 20 miles consistently, I think your feet start to get built up, and you probably could do it without the foot pain. But
it's like those, are they Muay Thai fighters? However you say that.
Exactly.
Where they slam where they beat the hell out of their shins. That's like not a workout. That's like how to harden your body. You just beat the shit out of your legs, and then your legs get tough. You should have done that to your feet.
I thought I was a little bit. I was running, but not enough. But overall it was great. And there's something like awesome about being outside all day from sunrise to sunset, and also just like the mental grind of doing it. And there's really no place to hide in the last. One of the parts that's kind of weird is we had lunch at about 27 miles in, and we sat down for lunch, and my body was like, "Great, you got a great day, like you're done." And I was like, "Nope, that's actually just the start. Like that, it didn't even get hard until the second half."
That was a halfway mark, and your
That was
body
the
was
halfway mark.
not liking that.
Yeah. So really, really great. I actually have a couple of takeaways for your walk and for anybody who's listening. So things that were really helpful, and I'll start with, like, we started at 4 a.m. It's a really good time, I think, to start. If you start that early, you can actually get through the day. We made a plan to hit under 20-minute miles. So we're like, we just got to stay under 20 minutes per mile. Start at 4 a.m. and then you can go the entire day. The biggest key, bringing 2 pairs of shoes. That was by far the best thing that each of us did. I did it with my father-in-law.
Did you swap the shoes back and forth, or only change them once?
I swapped the shoes back and forth. So I did the first 15 miles in a pair of shoes, swapped, did like another 30 miles in the next pair of shoe. Is that right? No. I did another 20 miles in that next pair of shoe, and then swapped back, and then did the final 15 miles in the first pair of shoe with multiple pairs of socks. I brought 3, but switching the shoes was like just a huge game changer because of the blisters and everything like that. So really important to have different types of shoes, I think, not the same type of shoe. That was huge. Having lunch halfway through, like we had, the way we structured it, we were walking, and at the end of the walk, the first half, there was kind of a little town where you could get lunch. And I mean, after 27 miles, I think I ate like a full pizza, full gyro, a bowl of soup, an affogato.
How big was the pizza?
It was like a medium to smallish size pizza. And that was so big because that powered through the next like 15 miles. And I can't recommend that enough. Like if you're gonna do it, like make sure you either bring a ton of food, or if you can plan it that you can stop 25 to like 30 miles in, get a big meal. It's going to help you on the backside of it. What else is really helpful? I think the breaking it into 3-mile chunks was really helpful. So we kind of just thought of it as like, because if you go 20 minutes, under 20 minutes a mile, then every 3 miles is basically an hour. So you can kind of check boxes mentally, because it's really long, and
It gets boring, right?
kind of, yeah. I don't know if there was ever a time where I was like, this is really boring. It was more just like, it's the time when it starts to get painful with like 10 to 15 miles left. You still have like 4 hours. And so that's the part that starts to get kind of, that's like the entire marathon, right? So you just have like a lot of time where you're kind of slogging through. So breaking into 3 miles chunks was really helpful, and just checking those off. So we would basically take a short break after every 3 hours, and towards the end where it started to get tough, we would every 2 to 3 hours we'd take like a 2 to 5 minute break at the end of those chunks, and like adjust shoes, maybe change shoes, grab a little bit of food, and power through. And yeah, that's kind of the main thing. Having a partner is really helpful. It would be much harder to do by yourself, just because of the monotony and the fact that like the last little bit, you kind of go through periods where you feel great, and then it'll be a period of like your foot will just start hurting for like an hour, and
A
then
period
go
of
away.
fuck this, I'm gonna call an Uber.
With that, yeah.
Yeah.
So yeah, and like my father-in-law was like, after lunch, he was like, oh man, this is going to be really hard to get back. And so after our first cup, like he started to feel pretty stiff, and then he got going, and like 3 miles in, he was like, okay, I'm good. I can, like, it's just like,
That's
you have
pretty
to
cool. You
keep
did that
going.
with your father-in-law. That's like a bonding experience. How old
It
is
was,
he?
it was great. 65.
Holy shit.
Yeah.
Good for him.
He's probably the only 65-year-old that I know, that could do average 18-minute miles for 50 miles. So he crushed it. And we both at the end we were we were very sore. We got to the car and we're like, okay. After about 30 minutes, it started to set in. We're like, all right, our legs are torched.
How was he feeling the next day? Was he just
Feeling good. I think both of us were feeling pretty good, but just kind of like just fully exhausted, like mentally. That's how I felt. Like my feet hurt, and then just felt like I needed to just rest. Body kind of shut down. But I highly recommend it, and I think it's one of those things that I like it because anybody who's in decent physical shape can do it. But it's really the last like 15 miles. You just have to be mentally tough to just push through because there's really nowhere to hide. You just have to just put one foot in front of the next and go. And the last 15 miles are going to take about 5 hours. So you've got 5 hours of suck, and yeah.
so a little bit of trivia and also motivator for me to actually get this done as well. There was a Spanish priest that came to California in the 1600s. His name was Junipero Serra, and he built all the missions on the west coast of the United States, all the way up Baja California through
Yep.
California. And the missions were built a day's walk away from each other. So there's missions like every 20 miles. My point is that like 100, 200 years ago, or no, this is a long time ago, that was like normal. That was normal for people. I'm just going to walk 20 miles today. That's like just how I get to work or how I'm just going about my day. And we've definitely lost that in society. So our bodies are made for this. We are supposed to be able to do this.
That's also another takeaway that I had was, we really didn't stop all day. Like we did a 20-minute lunch break, and then a couple of like I said, like 2 to 7 minute breaks to like change shoes. And it's impressive. Like your body is built to be able to just walk all day. Like you can do it. And yeah, sometimes there'll be a little bit of pain that kicks up, and then it'll go away. And but yeah, I highly recommend it. It's a great thing. But definitely if you can map it out in a way where like at some point you can refuel with food and water, you don't have to carry as much. That's a huge win. And yeah, I'm pumped. for. So are you gonna go on a mission walk then?
Yeah, I mean, I'm just threw that story out there more to say, like, to pump myself up that, hey, I'm a pussy if I don't do it because people have been doing it for hundreds of years. But I'll get it done. I'm definitely gonna get it done.
Do you have somebody who's gonna come in and do it with you?
I have a couple of people that have committed to doing it. I don't want to make it sound harder for me because I'm in Florida flatland, but it's becoming summer, so it's going to be brutal whenever I do it.
You gotta get it done as soon as possible.
Yeah, and my excuse, if the listeners don't know, I got my third child on the way, and my kids are also young, so I'm trying to get through this one little stretch, and then hoping to get it done in June. So we'll see. Right after we record this, I'm gonna go walk really far and beat my feet up to get it prepared for the walk.
Yeah, I think also most of it was paved, which is really helpful because if it was on a more of a trail, it definitely would like beat your ankles up even more.
Yeah.
But yeah, done. Feel really happy about it. Feel really proud. It was a good accomplishment, and love it. So get out there, get your 50 miles in, and email us if you go to adventurecapitalist.com, send us an email if you're interested in doing it and can give some tips, or you want to find another group that you want to do it with. Let's get into it today. There's a lot of stuff to cover. So behind you, if you're watching the YouTube, behind Cody, there is a book called Blood and Oil, which is an excellent book about Saudi Arabia.
Yeah, you recommended I read it, but just to mention the authors, it's Bradley Hope and Justin Sheck.
Great book. It's about MBS in Saudi Arabia and kind of his like rise, and gives a lot of context about what goes on in the kingdom. And I think it's important because that gives some more context about this huge Middle East Trump trip that went down, and kind of a whole change that has been brewing in the Middle East. So let's kind of dive in here. And Trump went to the Middle East, and he went to Saudi Arabia. He talked to the Qataris. There's a lot of stuff going on over there. What's been your biggest takeaway from this trip? What were like the good and the bad of this trip for you?
So there's like several things going on at once, and I don't whatever I'm going to talk about right now. I don't want to pretend like there's not other things going on because there's
Yeah.
it's hardcore 4D geopolitical chess going on right now. The most obvious aspect of Trump going to the Middle East is to strengthen ties there, right? We've more or less ignored that area for the past several years. So by Trump physically traveling to the Kingdom of Saudi Arabia, that was a big sign of, hey, we're making the effort for diplomacy. And it was clear that when I say we, the US wants to strengthen ties with the Middle East and the Saudis to pull away the Chinese influence that's pushing into that region and generally around the world. And the idea, big picture, is that if the US and West can align themselves with the Middle East, not only is it access to an enormous amount of energy, oil, gas, all that, but
Yep.
it should also strengthen the ties militarily that the Saudis and the Middle East have to fight terrorism, which overall stabilizes the world. And then the 4D chess part is got the Qataris, got UAE thrown in there, Turkey, like this pull for power. And the mission to go over there was to really just make sure that the status quo of the world is moving forward with the West being the power. And by the way, the
Mm.
status quo is for sure in jeopardy right now. And another interesting thing, and that I'm glad you referenced the book. If you're an investor and want to see the world's going, the book is a must read because it gives insight to the Saudis and what's going on there as a kingdom. And the way that that country is run is so different than the US and the rest of the West. It's almost offensive when you look at how their society operates. But Trump made a fantastic speech in front of all of them, and the media didn't cover it that well. But should go watch the speech. And Trump,
We might we can probably play it here.
okay,
We'll play a little cut. Uh, we'll play it right now so people can have a little idea of what he's talking about. And yeah, I mean, just to give some context, and we'll go into it. It's like he's just resetting kind of the way that we think about. We've had this idea of like nation building. He's flipping that on its head with this speech and going against this idea of nation building and leading it from a Middle East commerce first view, which I think is very interesting.
With this historic state visit, we celebrate more than 80 years of close partnership between the United States and the Kingdom of Saudi Arabia. Ever since President Franklin Roosevelt met with King Solomon's father, King Abdul Aziz, aboard the USS Quincy in 1945, the U.S.-Saudi relationship has been a bedrock of security and prosperity. Today, we reaffirm this important bond, and we take the next steps to make our relationship closer, stronger, and more powerful than ever before. It is more powerful than ever before.
right. So without picking apart the speech, the book is very good because it gives a much better insight into how the Kingdom of Saudi Arabia has risen to power, and specifically Mohammed bin Salman, MBS, what he's doing right now, the scandals he's been a part of for the past decade, but where it's likely that the Saudis are headed, which will likely pull along UAE, the Qataris, and that entire region, and having this bigger world picture, especially for that region, should give investors a better understanding of where some opportunities will be in the future, but also what parties may be cut out of it, such as Russia, such as China, and areas of opportunity in the immediate term. So overall, I think this is actually a very, very positive thing. There were several things speckled in there that are controversial. Probably the most obvious one was the gifting or the supposed gift of the jet to Trump. I personally don't like it. I'm not offended by it because I think that's it's just like a nice thing to do from the other country's perspective. But those countries are more or less led by huge concentrations of power. So a gift to another country is not like a threat to democracy. From the US perspective, we're like, what? This is like paying somebody off, and it's Trump. And of course, Trump would be the only one to take this gift. So there was a couple of instances like that I think threw off the bigger picture and which
Yeah.
the media really hung on to. But I think overall, this is a really interesting opportunity for investors going forward. And I'll make a prediction now. Um, I bet there's going to be some sort of Saudi ETF that launches in the next several years. And this will be, we talked about in the last episode how there's all these country ETFs. There'll be some sort of ETF or investing vehicle that it gets spun up for investors to invest in opportunities that are unfolding in this region. And I think that'll come out in the next couple of years.
Yeah, definitely the media jumped onto this Qatari jet and focused most of their time and energy reporting on that, and not on the fact that Trump's speech was basically recognizing that the success that's happened in the Middle East has been in spite of U.S. and Western efforts to quote nation build, and it's been driven mostly I'm going to say like bottom up, but it's not necessarily bottom up because it is a very concentrated society where the power is in the hands of a very few people, but by the societies over there themselves rather than a result of nation building. And I think that in general, it's like pretty consistent with this idea of America first. Like, we're going to focus on us and we're going to support you and do business. Again, a lot of the deals that were made over there, it was kind of a deal making trip. Billions, trillions of dollars committed to investing over a 10-year time period in the US. I think that's a huge win. Depending on how those things play out, right? It's really hard to quantify when people say we're going to invest $1 billion here, $1 billion there over 10 years. Like, is it actually going to come to fruition? I don't know, but it's definitely better than no money being invested and no commitments to invest in the US.
Yeah, and of course, there's a whole Israel topic going on right now with the conflict in Gaza and all that. So, and I just mentioned that because it's clear that every country in that region has an interest of how that will play out. But I think Trump going straight to Saudi Arabia, meeting with them in person, was a big sign of respect, and just to say like, hey, we're not going to talk about it, but we're acknowledging there was a bunch of bad shit that's happened in the past. We're here trying to make a new friendship. Exactly. And the numbers too, like you said, all the dollar numbers, I don't want to get hung up on that. Of course, though, the Trump administration's going to say in the next couple of months, here's a list of all the money we've gotten from this region and all the deal making, which is good. But I don't want to hang any sort of, this is going to happen and this is, how much money is going to be spent. We just don't know yet. It's just going to take too long to suss out how that all
I think the part that's interesting to me is on the on that, they kind of had tried to set it up so that maybe Trump could go to Turkey and meet with Zelensky and Putin. Putin skipped this meeting to, negotiate a peace talk. And then later on, apparently Trump had a long conversation with Putin and things are, quote, back on track and moving in the right direction. I really don't know what the hell is happening over there. I don't think it matters that much. I do think that there's kind of a break in terms of the relations between the Israelis and the U.S. And that's probably a bigger picture takeaway from this whole trip, is that it feels like there's less alignment with Israel and the U.S. than there was before. And I don't know if that's good or bad at this point, right? Like, you can make an argument for both.
Yeah, I think another way to look at all of this, which is specific with Ukraine and Israel, is that if the U.S. backs Israel and Ukraine without asking any questions, we are clearly becoming strong adversaries of superpowers, meaning Russia could easily say, we are going to do everything we can to take over Ukraine, and U.S. will say, I will do everything we can to back Russia. That's like, what's the next step? Nuclear war, right? The same thing with Israel. We go, we're going to back Israel no matter what. We don't care if we run over tens of thousands of people, Palestinians. What's the next step? Well, obviously Iran and Russia or whoever the proxies are going to back. So what I'm getting at is that by us stepping back from Ukraine and stepping back from Israel is making a series of different parties that have different interests, which looks more chaotic, and it is, but it's also less of a direct confrontation with superpowers. And there is, let's just say, a less likely chance that there's going to be a confrontation of a serious war between nuclear-powered countries now versus, let's say, 6 months or a year ago.
Yeah, It's interesting. I think my general takeaway, that was a very positive trip, and yeah, I think that there's only one person who can do a trip like that and have that type of success, and that's Trump, because he looks at it from a different perspective, right? It's like he's willing to question some of the long-standing ideas that the U.S. has had, and we'll definitely we'll see.
Yeah, I want to mention one thing about that because you're making up a good point, which is him going to Saudi Arabia, him going to North Korea during his first term, him meeting with Erdogan, him meeting with basically these dictators, these people who are known in the international community as committing atrocious war crimes and crimes against humanity within their own countries. A lot of people are quick to point at Trump and saying, like, what are you doing? What are you doing talking to these people? But I would ask the question, is it worse for him to go meet with these people to try and establish some sort of diplomacy, or is it better just to ignore them and have this silent relationship where there's an escalating tension between superpowers? And I would say that's been happening for the past several decades. That's been the general U.S. policy, is to not go have diplomacy. It's just to ratchet up our military operations around the world.
Sanctions, military,
Yes.
all those things. Yeah.
Yes. So this extending the olive branch, traveling to these countries, meeting with these,
Removing sanctions from Syria.
yes, that's quite controversial, but hey, it's at least like de-escalating the aggressive stance we're taking towards a lot of these countries. Now, of course,
It's at least trying something different. That's, I think,
Yes.
at the core, right? Like, this is where I think people get really uncomfortable with a lot of what's going on. It's just it's different.
Mhm.
I don't know how it's going to work out, but
Nobody does.
it's different.
Yep, absolutely.
Let's dive into the next kind of thing on our topic, on the docket today, which is the U.S. loses its credit rating. So of the three major credit rating agencies, Moody's was the lone holdout, maintaining an outstanding rating of AAA for the U.S. debt. They've held a perfect credit rating for the U.S. since 1917, but it now ranks U.S. creditworthiness one notch below that at AAA 1 or AA 1. Joining Fitch rankings and the S&P, which lowered their credit ratings for the U.S. debt in 2023 and 2011, respectively. So what happened here, and why does this matter?
So this is one of those topics that the general population is just not going to get at all. I'm going to say it in as simply as possible. The U.S. is becoming a less trusted debtor or somebody that you'd want to lend money to.
Yeah.
Which means that people are going to be becoming less and less willing to lend money to the U.S. And if they do lend money to the U.S., they're going to require a higher interest rate on the return of their capital. And it's as simple as looking at as an individual who has a credit card. If you don't pay your monthly credit card bills on time, your rate's going to go up, your credit's going to go down, and you're going to be someone who people are going to be less likely to lend to. If you do pay your credit card bill on time and you're very trustworthy, your amount of money that you can borrow is going to be higher, and people are going to be more willing to do business with you. And that's probably the easiest way to look at what's happening within the U.S. right now. But what's being lost in this whole thing, or maybe the average consumer doesn't see, is that the fact that this credit, by the way, Moody's changing their credit rating was not surprising at all. Like, again, Fitch and S&P already did this years ago, but it's basically acknowledging, everybody is acknowledging now that the U.S. is a less trustworthy, place to lend your money to. But the trickle down effects here are going to be enormous, and they're not going to be enormous overnight. They're going to be enormous little by little by little. It's this like boiling frog situation, and consumers are going to start to see it with real estate. They're going to start to see it in the power of their fiat currency, the dollar, with the inflation that's going on. And they're also going to see it with the international trade, with countries parking their money in U.S. treasuries is going to be less and less attractive. So which subtopic do you want to dive into first? The debt problem, or
let's go into debt.
Okay.
So yeah, why don't you walk through like where are we at debt wise, and break it down a little bit.
So we'll throw up an image of the U.S. national debt clock. I'm sure everyone who's listening to this podcast has gone to the website, usdebtclock.org. If not, just go on there. Great website. It has a real-time count of pretty much every financial number in the U.S. So U.S. national debt, debt per citizen, debt per taxpayer, and then it also shows the income, shows all this stuff. But the point is that we are at a point where not only is the debt unsustainable, meaning we can't even pay off our debt, but the amount of debt is getting to this point where, if you look back several centuries ago, if a country got in this situation, they would go to war. They would go to war to wipe their books clean, and that's how a country would get out of this debt situation. The U.S. is currently in a situation with the debt ratcheting up, where I do not see a way out of this without some sort of huge financial crisis and a huge inflationary event, or some sort of larger scale conflict. And this debt number that we're looking at right now is at $36 trillion is the debt. The big topic this week is this tax cut bill that Trump is trying to push through. It's currently on the floor with Congress. We're going to see where it goes there. But for me, as somebody who I voted for Trump, I generally agree with most what he's doing economically. This is a fail in my book. This does nothing. This tax cut bill is a waste. It's a status quo. It's basically doing the same thing we've been doing for the past 30, 40 years, which is we're cutting some things, but we're increasing spend in other areas. And the official number for the increase in our debt is going to be $3 to $5 trillion more dollars, I think, by 2030. So this bill we're pushing through doesn't do anything. It just gets us on the same track.
Does the same thing.
It does the same thing. And if rates go higher, we just talked about the creditworthiness of the U.S. Going lower, that insinuates a higher borrowing cost for the U.S. So our debt's going up and the cost of borrowing is going up. This is a crisis. This is a big, big, big deal. So that's my take on the debt right now.
Yeah. Well, I mean, when you talk about the interest rates, this is where it gets kind of, everybody can kind of think of it through their own mortgage. If you have a mortgage and a mortgage rate, it's the best way, I think the most tangible way to realize when the interest rates go up. If mortgage rates right now are back at around 7%, they were down at like 3, right? 3.5. Some people are locked in like almost under 3.
I have some friends locked in under 3, like 2.6, something like that.
And if you double that, you're doubling the amount of interest you have to pay, right? So going from 3 to 6, you're doubling. So if you have a $800,000 mortgage and it goes from 3 to 6, now you could literally only have $400,000 worth of debt and pay the same amount. So
well, let's just say it a different way. In the U.S. specifically, the amount of house you can buy is mostly dictated by the income you have. And most people are W-2 employees, which means you get a paycheck. And whatever your paycheck is coming in, if you take, say, 40% of that to pay your mortgage, that's basically what the house you can buy. So if the cost of the mortgage has doubled. You can buy half half the house than you originally could. And on top of that, real estate prices have like doubled in the past couple of years. So it's completely obliterated the ability for a W-2 employee to purchase a home compared to pre-COVID era times.
And one of the other things we were looking at is the 10-year treasury. So 10-year treasury is on a clear upward trend. It broke out over a 40-year downward trend. Why should people care about this 10-year treasury? Why does this matter?
So we'll throw up the image of this chart, and the image is it's a powerful image. I think you don't have to be a charting expert to see this. It's a downtrend. So the 10-year treasury peaked in the early 1980s, and until about a year or 2 years ago, it was on this clear downward trend. It's like the 5-year-old could see this on a chart, and it broke out, meaning the trend reversed, and now we're marching back up. There's, I think, a general assumption that rates will go back down and will continue in this area of lower interest rates. But if you look at interest rates over hundreds of years, this is very common where you have these debt and interest rate cycles that can take very long time. It can take 50, 60 years. It's just very hard for the average person to see because it's hard to have context of something that's outside your lifetime. And when you look at this chart, you look at it's clear that the trend is broken, going back up. And to imagine that interest rates in the US could be 5, 6, 7, 8, 9, 10, 11, 12, 13% is just, it's unimaginable. But if you look at this chart, that is absolutely where we're headed. So the 10-year is very important. So let me explain in very simple terms why the 10-year is important. The 10-year treasury is basically how much return on your investment the US government will give you in 10 years. Very simple. So in 10 years, it's quite a long time for an investor. The percentage rate on the 10-year note is a really good indicator because it basically shows what people expect for the US to be doing 10 years from now. And if the interest rate's going up, it means the general investor trusts the US less and less. The lender wants a higher return on their capital because they think 10 years from now it's going to be worse than it is right now. So that's why the 10-year is at about 5%. So let's fast forward to 2026, 2027. Let's say our debt situation gets worse. Let's say that our economy gets worse. And let's say that there's maybe some more global conflict. This 10-year note is going to go up higher and higher because investors are going to realize I don't trust giving my money to the US government because they can't manage their own books. They're printing money, they're spending money all over the place. They got, wars that are wasting money. I'd rather lend my money to a creditor that's more trustworthy. So I think the idea that the 10-year note is peaking right now, like we're up at 5%. Oh, there's no way it can go above 5%. I think it's complete horse shit. I think it could totally go higher than anybody could possibly imagine to a scary zone above 10%. I'm not predicting that. I'm just saying I think that could happen if we don't get this debt situation under control. And we're not going to get this debt situation under control without serious austerity measures or severe financial pain for the general US population. And I don't think any politician wants to do that, straight up. I just don't think they'll do it. Not even Trump. Nobody wants to do that. They're not willing to put the US population through that type of pain. Scary.
It is scary. And back to like the real estate side of things. What are you predicting on the real estate side of things?
So it's a great question.
And by predicting, by like your decision making.
So I got a friend who's building a house nearby. It's a mega home. It's on the market right now for $38 million, and he's like a spec home builder. I sent him an article the other day. It was in the Wall Street Journal, which was that wealthy Americans are parking their capital in luxury high-end real estate. I would say a $38 million home is probably in that category. And to answer your question specifically, I think there is that part of the investors' mindset and U.S. real estate, which is people are parking their money in very high-end real estate because they think that U.S. real estate in that category is going to maintain value over the long term. So if I have $38 million in cash, am I going to leave in the bank account or leave in this real estate? People are in that category generally choosing to put it into real estate. On the opposite end of the spectrum, let's say homes in the several $100,000 range, I think there could be trouble there. And the reason why is because most of those homes are correlated to the W-2, the paycheck person, which is if I have money coming in and I can only afford a certain amount to pay my mortgage, and interest rates continue to tick up, I can afford less and less and less. So and by the way, the inventory of homes on this lower end, the inventory of homes at the $500,000 or less mark compared to these super luxurious homes is like, it's apples and oranges, right? It's probably like a 99-to-1 ratio. There's a huge inventory of these lower priced homes. So if these lower priced homes are directly correlated to interest rates and the ability for the W-2 wage earner to purchase these homes, and there's no ability or way for these people to purchase these homes outside of traditional mortgage, we're gonna have a serious problem. I could see those real estate prices coming down significantly. So it's kind of like a tale of two scenarios. And no one has a crystal ball, but I think we'll see some gridlock for a bit longer until something breaks, and it will be on the lower end priced homes. And
what would break would be potentially interest rates dropping,
or prices falling. Falling of of those
like finally capitulating and realizing, okay, the interest rates are not going to change, so prices have to come down.
Right, and of course the Fed can artificially suppress interest rates. I mean, that's what Trump wants Powell to do right now. Trump has said all kinds of stuff about he thinks Powell should lower interest rates. It'll stimulate the economy. But the Fed lowering interest rates has nothing to do with the 10-year Treasury. The 10-year Treasury is dictated by the market. So the 10-year Treasury rate is set by investors. It's a free market. It's people willing to lend money. So if the Fed artificially suppresses rates at the Fed level, and you got the Treasury yields going through the roof, like it's you can't do that. The economy is going to suffer significantly, and real investors and people who want to lend money are going to lend at the rate that they think is appropriate, and that's what the mortgage home lending market's all about. The one caveat to that is if the government really gets involved in trying to control these rates, and which is what Canada is trying to do right now. Canada is looking at doing this. Carney has stated that he wants the government to take over the home lending market, which is going to be a complete disaster. Anytime, there's not one time in past multiple centuries that the government has intervened in a housing market and made it better. They always make it worse. So it's a bleak outlook, to be honest with you. It's pretty scary. That the best scenario, I would say, is that the U.S. cleans up its books aggressively over the coming years, and we somewhat maintain interest rates in the ballpark where we're at, and act like a mature person who can spend and save money appropriately, which I don't think the Congress will do. The U.S. Congress will do.
Yeah, there's
Scary.
really there's not much incentive there.
Yeah.
Let's move to the commodities, equities versus the U.S. dollar ratio. So you shared this really interesting graph with me, which we can put up here, which is the commodities to equities ratio versus the U.S. dollar. And what it shows is that we have kind of a peak in the value of equities and like a bottom in commodities. Why is this interesting to you, and why have you been kind of diving into this? Why have you been studying this?
So this somewhat correlates to everything we just said about the 10-year treasury, real estate, all that. So this first chart will actually, let's show this chart first, which is the stock to commodities ratio. We'll throw this image up. This is a chart of over 100 years, and the blue regions show when commodities perform poorly. And the like kind of reddish orange region shows when commodities perform very well. And it's clear it's very cyclical here. And there's somewhat of an inverse correlation. Then we'll throw up the other chart, which is it's the commodities to equities ratio, which is the chart we just showed, compared to the US dollar. And there right now, you can see this chart with the blue line, the white line, they're at clear inverse correlation. So what's going on here basically is that for the past almost couple of decades, the U.S. stock market has been on a tear. Actually, about the past decade, since 2008. And when you have that going on, you have investors who want to risk their capital into companies that are taking big risks, into Google, into Meta, into Amazon, or whatever. They're building a company, and investors believe that their capital is going to grow much more aggressively with these companies. And one of the big reasons why is those companies had access to cheap capital. They can borrow money and build big things, and you have a big tech boom.
Invest it into building, yeah.
Yeah, exactly. That's exactly what's happened. But the side effect to that is there's other parts of the market that get completely forgotten about, and the commodities area is one such area that usually is inversely correlated to a strong equities market. So what we're seeing right now is commodities historically cheap compared to the strength of the US dollar and equities valuation. So that's one of the reasons gold has been on an early outbreak. Gold's really the leading indicator right now of what's to come likely in commodities. Gold's trading over $3,000 an ounce. Meanwhile, many other commodities and metals and precious metals have not really moved at all. So if you're an investor thinking, okay, I just listened to this whole debt issue, I listened to this whole 10-year treasury issue, I'm listening to the housing crisis potentially unfolding, I know the stock market is still wildly valued. What's cheap? Well, commodities are cheap. You can look at the charts we just showed. It's a fact in the cyclical nature of what gets undervalued. And I think it's a very interesting play right now to start allocating into the commodities sector. I personally have been for about the past year. This is much more a long-term trend. This is not going to happen overnight. This is not going to be some 100x you're going to see in 6 months. This is going to take several years to play out, but this is a clear way to play the markets right now, where you can see there's a shift in sentiment. There's a realization that we have a major financial problem here. And at the same time, commodities are dirt cheap right now. So
I
my
think
preferred.
it's interesting. I think we've all been kind of programmed that, especially with crypto and tech gains, that you look at like over the last decade, really longer than the last decade, the places where people have made a lot of money have been in crypto and in tech, and they've made a lot of money quickly. There's a lot of entropy, right? Where it's like, well, if that's the way that people have been making money, that's still going to be the way that people are going to make money going forward. And they're looking for fast growth in those spaces. And it hasn't really changed. I mean, still, we're at peak tech stock valuations almost. Crypto's hitting all-time highs. So is your thought like there's a sell in May, go away sort of thing that has been around for a long time? Do you kind of feel that we're at this place right now where we're going to have a slow summer and we're going to, maybe pull back from some of the levels we're at right now?
I don't want to predict the short term, because I think there's a chance that Trump could pull a rabbit out of the
summer.
hat. I actually do. I actually really do think that. I think there's a chance that equities could really rip for the next year or two if Trump keeps delivering on a lot of these agreements.
Yeah.
And I'm not saying they're perfect. I just think that he has the ability to walk back a lot of things that would help the market, and he knows that. And I think he's waiting on walking those things back until the market really suffers, or until he can get a better deal done with these other nations and the tax cut bill and all that. So anyways, my short-term prediction is that there could be another rip. My long-term prediction, I'm talking the next like 4 or 5 years, it's very clear to me that those charts that we just showed, placing money in commodity sector is going to be a very good long-term bet. And I was going to say my favorite one right now is platinum. The quick thesis on platinum: gold's at $3,000 an ounce. Platinum is much more rare than gold, and platinum historically has traded at a premium to gold. Platinum is about $1,000 an ounce. So if platinum was to catch up to gold, that would be, going from $1,000 to $3,000. That's quite a gain for platinum. That's a one-off example, but there's many other commodities in the space right now that are in similar situations that have not ripped at all, even though we've seen gold go up, and we're looking at the charts saying commodities are historically cheap. So, going back to your question of like what's going to happen in May, are people going to sell and go away? I think people are going to stay a bit more engaged this year, more than general, because they are expecting big things from Trump, and he may deliver on it. So we may see some equities rip, but the only thing that's going to do is just pump up valuations higher and higher. And at some point there's going to be some equilibrium. And I am a general believer that you can grow the pie, meaning evaluate a company or the market can grow into valuations. Like you can grow something to grow into the valuation. I just think valuations are way too high right now that we cannot grow that fast. We need valuations to come down, which would suggest some sort of pullback in the market, more than we've seen already.
Let's dive into crypto, and then we'll get to the last thing, which is which I'm interested in talking about. I mean, crypto is having a really quiet rally. While actually we were on this 50-mile walk, we're getting updates that Bitcoin was hitting new all-time highs, and that's really not being talked about. I think a lot of it's overshadowed by a lot of the kind of similar thing that happened in the last administration, Trump administration, which is a lot of chaos. So a lot of things just kind of slip through because there's so much news breaking all the time that something like Bitcoin hitting an all-time high again doesn't even make it to the front page or even close to the front page of the headlines. Why do you think we're having this really, I would say, kind of weird, quiet crypto rally?
I think it's several things. I think one thing I question myself, is this Trump's strategy just to move so fast and do so many deals and make so many scandals happen that people are just losing track of certain things, and just crypto just kind of like slip by? I think that's part of it. I think another part of it is that this has happened in past cycles where crypto goes to a new all-time high and then it cools off and then it comes back to where it was before. And no one's really talking about it because everyone's thinking, oh, it was there before. But that's really just setting the stage for the next leg up. And I think we may be in that zone right now, which is crypto's around, or Bitcoin's around 150,000 US dollars per Bitcoin. It's
not 150, 100.
sorry,
105.
105. Sorry,
Yeah, yeah.
105,000 US dollars per Bitcoin. That's not past the all-time high that was several months ago,
Yeah.
but this is very similar to past cycles where you have the first high, then it retreats a little bit, consolidation, and then it rips again. So this could very well be right before it rips again. So I think that's why a lot of the news is missing right now, because it hasn't made like a crazy all-time high yet. I think another thing is that's very, very interesting that people are totally missing is that companies around the world are adding Bitcoin to their holdings. So instead of holding a currency, they're actually holding Bitcoin now. And it was important when the first company did it and the second company did it. But when the 37th and the 67th,
People don't even think about it.
people don't care about it.
Yeah.
And this has been going on for months and months now. And I think it's just one of those scenarios where people just kind of forgot and they're just paying attention to other things. And meanwhile, this crypto rally is just silently building momentum and building strength. So I would say for the rest of 2025, it could be a very, very interesting situation for Bitcoin and the entire crypto market.
Yeah, I mean it's exciting for if you've been in the crypto game for a while. It's exciting and it is very cyclical. And I also see just like the continued understanding. We talked about this at the beginning of the year. One of the predictions around stable coins and crypto adoption is that just more and more people are going to be more comfortable with it. And I see that happening. It's like more and more people that have not been involved with it are just getting more comfortable with it and getting involved. And there's a limited number of Bitcoin, right? One of the best theses is like there's only 21 million, right? 21 million Bitcoins out there that ever. And there's more multi-millionaires than there are Bitcoins. So will people want to own a piece of it or at least one Bitcoin? I believe yes. I think long term, I'm very, 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 very bullish.
Before we move on from that, I just want to mention the wide variety of crypto products that are launching or have been launched in the past couple of months that offer new ways for people to borrow or get, let's say, juiced up yield. We're basically talking about like derivative products and leverage products. I actually think a future prediction is that one of these products is going to screw up the industry, and that's going to be like our next pullback in crypto is one of these leverage products is going to blow up.
Yeah.
But for the short term right now, I think people are going to make some eye-watering gains over the next 6 months. I'll just name a couple of them here. The first one obviously is MicroStrategy. Everyone knows about MicroStrategy. This is Michael Saylor's money glitch machine where he's basically borrowing he's taking on US dollar debt to buy crypto and then refinancing that, and there's just this like feedback loop of adding more and more Bitcoin.
As long as it continues to go up, it works.
Right. So there's that. Now there's several different ETFs that play off of MicroStrategy. One that's interesting is MSTY, and this actually doesn't really correlate to the price of Bitcoin or even the price of MicroStrategy, but it looks at the options, the puts and calls on MicroStrategy. The fees on those options are very high, so investors are willing to pay a lot of money for those options for MicroStrategy, and this ETF is harvesting the yield off of those fees that investors are willing to pay. And this ETF right now is at 10% yield per month, and that's an annualized. They're I think 124% annualized yield. Now you have the actual stock price, like a bond, that can go up and down. But the point is, this is another product that has never existed and offering insane yield for crypto investors. And then the last one I want to mention is the Bitcoin collateralized loan that Coinbase just launched. This happened a couple weeks ago. This has existed for a while in other areas, mostly in European and Asian markets, because they're a little bit less regulated with crypto. In the US, this has not really been offered on an institutional grade, such as Coinbase. So what you can do right now is you can borrow up to $1 million on Coinbase, collateralized by your Bitcoin. It's an 87% loan to value. borrowing percentage and or borrowing LTV, and the rate is around 5% right now. So if you have several $1 million worth of Bitcoin, you can borrow $1 million. It's 5%. You don't have to pay it back at any time. You have to pay it back to yourself. It's a loan from yourself, and you're not taxed on it. And I think this is a whole nother avenue for people to access capital if they want to refinance or buy a home, or they want to pull money out. Of course, you have to have the Bitcoin in the first place. But the point is that there's a lot of these new products being launched that are totally circumventing the traditional banking system, and I think it's the future. I think it's where money's going altogether. Obviously, the general population hasn't figured this out yet, but it's like every week there's some new product being launched that is clear that this is where money is going.
Yeah, it's pretty interesting. Definitely check out Coinbase's collateralized loans. You can go read about it if you go to their website and see what they're doing. I want to shift and go to what I believe is one of the biggest scandals that we are going to see, well, that we've seen in the last 10 years, which is, it's very clear, at least from my perspective, that Democrats are going through a shift right now, and they're trying to pin a lot of the challenges they faced in this last election on Joe Biden. And came out this last week that Joe Biden has got an aggressive form of prostate cancer that has gone into his bones. And what does that mean? He probably doesn't have that much longer to live. There's a book that's coming out that just came out this week about the cover up of his mental decline. And this pairing with him saying that he's got cancer is fascinating to me, because it feels like, one, there's just absolutely no way that they didn't have an idea that he had cancer before this last week when they admitted it. And to me, this is one of the biggest cover-ups and scandals that we're ever going to see. The sitting president having prostate cancer, not admitting it, running for re-election again. Now, just to set the stage, like, a lot of people, they're claiming that he just learned that he had cancer. But there's a video from 2022 when he actually says, when he's talking about cancer, that I and many other people have cancer. The administration is saying he was talking about a different type of cancer. But when you think about the type of healthcare that the president has access to me, it seems like there's just no possible way that they did not know that he had cancer. I mean, we're talking about stage 4 cancer in his bones. And they're claiming that he learned about it and admitted it in 2 days, right? We learned about it and admitted it in 2 days. That to me seems absolutely ridiculous. And it seems like another example of a massive cover-up to just pretend that he was fit for office. And it's really wiping out any faith that I had really very little faith in the traditional media. It's making it even harder to believe anything that they say. Just the fact that, I mean, think about like Prenuvo. I don't know if you're familiar with Prenuvo, but it's a scan. You can take a whole body scan and it'll tell you if you have cancer. The fact that they're claiming that they did not do this and that they just found out that he has aggressive cancer seems completely ridiculous.
Wall Street Journal, said it today. I don't know if this is a tongue-in-cheek article, but it says Joe Biden had unrivaled medical care. How did his cancer go undetected? Other presidents, including Donald Trump, have undergone and released their prostate screening results. I don't know if this article is kind of saying the obvious, what we're all thinking here, but maybe this is an explanation to everything that everyone was wondering about his bizarre behavior, his seemingly up and down ability to talk sometime, but also being completely airheaded. Maybe he was on some sort of drugs or whatever. But the point is, I think what you're getting at is this is a huge scandal, right? That this was kept from the American public, and that they were possibly trying to get somebody to run for president again who they knew had cancer, was clearly in decline mentally, physically, everything. And just pretend like nothing was going on. It would be a huge scandal. But maybe it'll be one of those things that just brushed under the rug, like everything else that's happened over the past several years.
I think right now it's getting brushed under the rug because people they're just covering their ass. It's like you can go back 5 years from now, you'll be able to say, well, we were talking about his cognitive decline because there's a book written about it. They, found out he had cancer, all these different things. But man, that is it's an absolute mess. And it's one of those things that if you just put the shoe on the other foot, if Trump had cancer and they were hiding it, it would be the only thing that anyone would be talking about.
So let me ask you this. Does this make you lose faith in media, or does this make you lose faith in our government, or does this make you lose faith in the Democratic Party?
All of the above. I mean, it's like it starts with the Democrats and the fact that they're willing to put the entire country at risk, right? The other thing that's really interesting is there's this book about his cognitive decline, the fact that he didn't even know George Clooney's name. One of his biggest supporters, longtime friends, hosted this huge fundraiser for him, and he didn't even know who George Clooney was. He forgot who one of his really good friends was. And then Clooney came out 2 weeks later and wrote an op-ed about how he doesn't think Biden's fit for office. And this was back in, I think it was like June was when this fundraiser went on. And so you've got this massive, like that's happening. So lose faith in the Democrats, lose faith in the government, because there's got to be people there. Like, is it doctors who are covering this up? How are they not putting a president through? We've got technology to scan their bodies, figure out they've got cancer. Either it's willing, like a willing ignorance that they want to avoid him having a cancer diagnosis, or it's just a complete cover up.
Well, this just goes to my general theory that the entire world is basically a Game of Thrones, and you have these royalty representing each country. And the U.S. likes to call itself a democracy, but we're more or less a population with this elite that is running the show. And these leaders who are politicians are just representations of certain powers that want certain things to happen. And I think Trump is a big disruption to that because he's an outsider and he like ruins that whole thing, which is why most people hate him. But I think Biden was like the complete opposite of Trump in that regard. Biden was a career politician. He was a career guy who was the spokesman for different agendas or different, people that wanted things to happen in the U.S. And it's almost sad that he had to go out this way, which is basically he got taken out by his own party.
For sure. He's being taken out right now.
Yeah, but he was just a puppet for people that wanted things to happen.
Did you see the interview with Bernie? He was on a podcast.
No, I didn't see it. I don't like Bernie. I don't listen to him.
You what?
I said I don't like Bernie. I like 5% of the stuff he says. He's such a hypocrite. Oh my God, the guy doesn't have like multiple multi-million-dollar homes, and then he preaches about basically.
Well, I mean, there's definitely hypocrisy with Bernie, like all politicians. But I thought it was interesting because he was on this show, Flagrant, with Andrew Schultz, and they brought up, they're like, he was talking about how Trump's a threat to democracy, and they're like, well, we kind of make an argument that the last, what do they say, since the last 3 Democratic elections have really not been democratic, right? Like,
I mean, you could argue the past century in the U.S. hasn't been democratic. There's horseplay in every election.
Totally, but they're specifically talking about like Democrats and how they pushed out Bernie, even though he was leading, and put in Hillary, and then Biden got.
They pushed out Tulsi too.
What's that?
They pushed out Tulsi and Bernie. Tulsi and Bernie were polling better than Hillary at the time.
Exactly, and they asked him, like, are the Democrats also? You're saying Trump's a threat to democracy. Why aren't the Democrats? They were the ones that put in their preferred candidate for the last 3 elections without input from the voters. And he was like, I'm not going to argue there. He's like, you're right. I was pushed out. If you look at basically Biden was pushed to the top, and then they let Biden run and then replaced him with Kamala. And it's interesting because he's kind of saying the quiet part out loud that most people are not willing to say. And yeah, it's very interesting. I feel like watching it as a lifelong Democrat. I'm a lifelong Democrat. It feels frustrating to see this play out, and just once again another thing comes out. Biden concealing his cancer diagnosis for what end? The end of maintaining power, and it's frustrating.
Well, I'll tell you
People should be pissed off. I'm pissed off.
Yeah, I don't think. I mean, I'm not surprised at all, though. I don't think anybody's surprised about it. It's all bullshit. All of this is bullshit, and I think this is the big takeaway from this entire episode and the entire venture capitalist, ethos is to take your future into your own hands. To take your financial, economic, family, everything that you're responsible for in your own hands, and don't trust these people who are trying
Or
to
at least
control
just
the show.
use your eyes and your ears.
But you
And
can't.
I
That's the
think
point.
back to the commodities, right? It's like it's commodities being at all-time lows, tech stocks stocks being at all-time highs. People always think things are going to be different, right? This time is different. It's not different.
It's not different. Yeah, again, go watch Game of Thrones. If you watch Game of Thrones again with the idea that like this is how the US is run, it just all makes so much sense.
Awesome, good show, and hope you guys enjoyed it. If you've not subscribe to our YouTube channel. Share the episode with somebody. We would love to hear from you, and we'll see you on the next episode.